But yeah, we got a good guest today, Neil. Stavros is going to talk to us about some Elliott wave, see what else is on his radar. I'm excited because this is something that I personally want to learn more about.
Same here. 100. A little, is that Socratic? If A and B, then C. Logically, I'm more jacked than Luke.
Yeah,
We've deduced that.
I hope he's not in the chat right now. Otherwise, I might be getting a stern talking to. Wait, no, Shelly. Neil doesn't hate the shirt. Neil would never. Neil loves the shirt.
I love it. I think it makes you look like the Green Knight.
Yep. I don't know who that is, but
it's a mythical character from Arthurian legend that was recently made the titular character of an A24 film that was like, okay, if you guys saw the Green Knight. Give me a 1 in chat if you're at least aware of the Green Knight or saw it. Give me a 2 if you have no idea what we're talking about, and we should
What's the
start
big
talking about
movie
stocks.
that A24 made?
They've done a lot of movies that have gotten a lot of critical acclaim. I like them.
I'm gonna try to figure out which one I know though. But yeah, we got a good guest today, Neil. Stavros is gonna talk to us about some Elliott wave, see what else is on his radar. I'm excited because this is something that I personally want to learn more about.
Same here. 100. So why don't we bring Stavros on right now?
Well, wait, let's wait for the universal signal for he's ready.
Oh, universal. Yeah, there it is. I think that means he's ready. Hey, how's it going?
All good. Aaron, so, you go. Been a while.
Oh, you guys have history.
Not much.
Okay.
But we are gonna write history now.
All right, good stuff, Stavros. So it's very nice to meet you and have you on the show.
You too, Neil.
For folks who are not familiar with you or your trading style, would you mind giving an introduction?
Sure. Yeah. Basically, I live over in Cyprus, and I've been working for years in the forex industry, traditional markets. I'm heading currently the investment research department of a forex broker in Cyprus. I'm a licensed person. I've got my SEC license from the Cypriot authorities here. And obviously, it's understandable that I'm very into Elliott waves. I've been for years now, to be fair. And with the crypto boom, like maybe like a few months back, actually, I thought it might be a good idea to go ahead and create a channel on YouTube because I saw a lot of Elliott wave analysts, and I saw the analysis, and it was a bit, like I'm like I need to step in here and show to some people what really is Elliott wave analysis, because I saw a lot of mistakes, and I think people just were too quick to jump in. And the fact that they are quite complicated, I think, it might be to the advantage of someone who's looking to gain some popularity. Anyway, long story short, my channel like organically boomed from like I have like 5,000 followers or so. Not maybe not by much, but organic growth. I think it's doing well, and it's purely because I'm really into Elliott waves, and my analysis has proven to be quite good. I have a good following, some people on Telegram as well. So the idea here today is to do a mini course, let's say, in whatever hour we have, whatever time we have, as much as we can. Try to keep it simple and not too complicated, not get into much details. And then what I would like to do is go live on the charts and show my BTC count, Bitcoin, right? Might be interested to some people currently to see what's going on with it, because everybody's expecting this bull run to continue. But probabilities, well, from an Elliott wave perspective, show something different.
Don't spoil it. Don't spoil it.
These probabilities change as we get data on a daily basis, right? So we're just here to analyze, use Elliott wave as an edge, right? And then make educated decisions pretty much about whether we want to long or short or whatever. And this is obviously we're talking about a few months time from now. We're not talking about the long term. Obviously, the long term is crazy bullish, but we will get there as well at some point. So I think it might be a good idea to share my screen.
Mhm.
Yeah, and
Yeah.
might be better. Hold on, because we've got the. I think it might be a better idea to start with the whiteboard actually, right? So we can just take like 10 minutes to do some basics so people understand what I'm going to draw later on. So the basic idea of Elliott wave, so the theory, what it tells us is that markets obviously progress and regress, right? So we see a trend. In order for us to see a continuation, we need to see 5 waves up. So usually when we see 5 waves up, this is the progress with no interaction between these two corrections, which I'm pretty sure everybody understands. Then we are getting a corrective leg to do the regression sort of, stage. And from there, most likely markets then continue with the trend, and we do still get this 3 wave counter trend correction, right? Now, when we are looking at this particular leg to the upside, which is 5 waves, by the way, right? And we're just going to repeat. We are looking at a motive wave, okay? So this part over here is the motive wave. And the parts over here, this is the correction, okay? So it is a corrective leg. Corrections have 3 waves, okay? But there can be also complicated corrections that might have 5 waves, or even if you take the internal structure as well, even more than that. Now, people have heard for sure about a cycle. So they say the Bitcoin cycle, for example, did not finish or whatever. So the cycles, from a Elliott wave perspective, it's pretty much the basic 8 wave pattern, okay, which is comprised of 5 waves to the direction of the trend and 3 waves counter trend, okay. Now all these move from the bottom, which is just say 0, and let's pull this one and let's label this as a 2, which is the right way of labeling as well, by the way. This is the basic cycle, okay. Now if we look at the market, if we zoom in on this particular 8 wave pattern, internally we're going to find again 5 waves going to the upside and 3 waves to the downside, and that is pretty much the case here as well on the downside, right? So we'll have a correction here, and within the correction we still have 5 waves down, 3 waves up, 5 waves down. This is a cycle, and when we look internally, we're going to find 38 waves in this cycle, right? So the 38 waves is the full cycle, and this is usually the end for a particular bull market, let's say, right, or bull run. The I is always the 5th wave, because internally here we have smaller waves, right? Now, the upside, which is the impulse waves or motive waves as they are called, the motive waves are always labeled numerically. So you're going to see 1, 2, 3, 4, 5, okay, and nothing else, because these are the motive waves. There is 3 types of motive waves: impulses, which is what I've drawn here, and impulse does not have an interaction. These 2 corrections do not interact with one another. For example, this one interacts because my first wave, 3rd, 4th, yeah, and 5th, because these 2 interact. This is a motive wave, but it's called a diagonal, okay. So there is 2 different types of motive waves: impulses, no interaction, and diagonals, interaction. Diagonals are 2 of those. One is the leading diagonal, which we can only see in waves 1, and over here in the corrective phase, which I didn't mention, but I'm mentioning it now. These are always using the alphanumerical, the corrections use alphanumerical labels. So we've got the first wave here and the second wave here, yeah. The first wave always is the leading diagonal, okay. So the leading diagonal of the motive waves, right, only appears in wave 1 and in wave A. Now the other diagonal, which is the ending diagonal, Peretz also Peretz label as well, it's only found in waves 5 and in waves C. Now we also need to mention that the ending diagonal can also appear in flat patterns, which we're going to see next. And the flat pattern is a particular correction. Okay. Now I'm going to clear this quickly. We've got the motive stage, which is the one that progresses out the way, and now I'm going to get a little bit into details about the corrections. Okay, so corrections, as we said, are alphanumeric. So we're going to find different types. One type is the ABC zigzag. Okay, and we call it ZZ, it's double Z. So this is virtually the same as 1, 2, 3 without the 4 and the 5. That's why sometimes they're very hard to differentiate between one another. There is also the double zigzag, which is called W, X, and Y. Okay, and we can name that as a DZZ. What happens in this case is that we're going to have like 3 waves only, 3 waves and 3 waves. As you can understand, this is more of a sideways market usually when we see corrections, right? By the way, just let me just put this arrow towards to the downside, just so people understand we're talking about the bearish pattern now and not the bullish. So that is going to be, for example, a W, X, and Y, right? And this is our ABC. But let's also say zigzag. Yeah, let's also say that this ABC zigzag is actually literally found in here. Okay, in here we have an ABC. So as you can see, if we connect 2 zigzags together with this leg in the middle, this is exactly what is making the double zigzag. That's why it's 2 zigzags together. There is also a different correction that is called a double 3, which is very close to W, X, and Y. Again, it's labeled as W, X, and Y. In this particular case, the corrections, they are not the W and the Y, they are not zigzags. Okay, one of the two can be any other corrective pattern. Not, let me correct this, not any, but most of, because as I said, we have other corrective patterns. So off to the other corrective patterns, we do have the flats. Okay, a flat pattern is separated into the regular one. Okay, I hope my letters are easy to understand, and also the irregular one. Okay, I'm not sure how many have heard this term before. So the regular one, the flat pattern, by the way, it's a pattern that is 3-3-5 pattern, right? When we say 3, we mean 3 waves. So if it's 3-3-5, it means that on the downside we see 3, 3, and 5. Okay, so that's my first 3, second, and third. It's also, because it's a correction, labeled as an ABC. Okay, now this is the regular type, because in the correction, in the flat correction, we are expecting actually the move to the downside to be fully retraced by wave B up to 105% of the first wave, and then we accept wave C to end around the beginning of wave A. Okay, so the irregular one, which we're talking about here, there's 2 different types. One is the running flat, okay, and the other one is the expanding flat. Now, don't forget that all these patterns are very important, because the moment you identify those, you know what you can expect. I mean, in the future, you can predict the future with high probability, pretty much. Okay, because these patterns don't come in any order that we like; they come in combinations. So, running flat is when the third leg, it doesn't really retrace fully all the way down here, and the expanding flat is when we are going beyond this previous wave. Okay, the other correction type is, of course, as everybody knows, the triangles. Okay, and triangles can be ascending, descending, can be open, can be contracting, expanding, and other rules and guidelines also, of course, exist over here, which I think if we're going to really go into the rules and guidelines as well, I think we're going to have to spend another hour. So I'm going to keep it there for this small introduction. Okay, just the motive waves, the corrective waves. Okay, 5 waves we need to identify to the upside to identify where the trend is heading, and 3 waves to identify where the correction is. Okay, and from here I'm going to jump to the BTC charts. Okay, so Um, Obviously, some data are missing, the truth is, but we don't mind because we know what the count is. Okay, so I'm not going to go into labeling, but this is simply labeling the cycles because it's different degrees. So if we're looking, for example, at uh, like 10 years or 1 month, these are labeled differently. For now, I'm just going to use this over here, and we're gonna hold on. We're going to call this a primary because it's actually the primary degree, right? For more information on this, anyone can obviously, go online and find out how the degrees are labeled. So what we usually do in Elliott waves, we are to identify when the trend has pretty much is under risk of ending. We use a channel. Okay, everybody knows the channel, and what we usually do is go and connect our wave 2 and our wave 4, yes, and then connect our wave 3. This would be, for example, for the acceleration channel. There is also a different channel where we connect waves 1 and 3, for example, yeah, and we'll go all the way down and connect our wave 2. As you can understand now, that flipped a bit weirdly is because I'm using the logarithmic charts,
Mm.
which is always recommended when we're looking at exponential moves, as of course we know with all cryptos is a bit of a situation. So this is our channel. Okay, this is the acceleration channel. You can see that acceleration wise, we've had a correction down here, which means now there is risk of getting another correction outside this. What I will do, I will just try to draw another channel here. So we'll connect the 1 and the 3 because that is going to be our base channel. Okay, and maybe I've got it right here. Let's see. Perhaps not that good, but roughly. It's a bit hard to do it with logarithmic. But anyway, the main point is this, okay? That we have done the first, the second, the third, and the fourth wave. And as we said before in the theory, the main principle is that, we're going to receive the fifth wave, right? And from there, we're going to see a corrective leg, ABC, W, X, and Y, or anything else, uh, once we do a new high, right? The question is, what's going on internally over here, right? And many people think that we finished down here and we're going to move higher now, but there is two thoughts over here, right? Probability wise as well. One is that this is indeed the case. The other one is that we're going to get another leg down, and I will explain why. First of all, the bull run is not over. Okay, why? Because internally we have one, two, three, and four waves so far. So we need to get the fifth wave in order to consider this bull run finished. The fifth wave can go anywhere above the previous high, but it can also extend massively. Usually it's wave 3 that extends in the traditional markets, but in cryptocurrencies, wave 5 extends due to thin liquidity. Okay, so what this means in a few simple words is that the whales will push the market as high as they can in order to be able to pocket as much as they can. This is the thought behind it because they can push the market quite easily being whales, right? So if someone holds like 10,000 Bitcoins or the dollar value of it, the tether value, it's very easy for them to push the markets up or down. And the market is very manipulated. Now, I'm going to go back to here, right? Internally, we've got 1, 2, 3, and 4. Many think 4 finished, others think 4 is not finished. I'm going to use the same method, and I'm going to take my wave 1 and wave 3 here, and I'm going to pull the channel over here. I cannot take it much lower down because we're looking at the logarithmic charts, but you'll be able to see that there is a lot of room to move lower down. Okay, there is a lot of room. Now let me delete this, and I'm going to go a little bit closer. Maybe we switch down to the 4 hours, and I'm going to explain why I expect another leg down. Okay, as we said before, markets move in 5, 3, 5 moves, right? So whether we are in a in a bigger trend moving up or down internally over here, this corrective leg, because it is corrective, has 5 waves. One, two, three, four, five. And these waves are clear 5 waves. Okay. The two corrections also match with one another in terms of size and duration, which is something that we need to look at when we look at Elliott waves. With 5 waves being done, this can only be a wave one or a wave A. Okay, so one means we're gonna get two, three, four, and five, or we're gonna get A, B, C. The question is not that. The question is, are we here on a B? Because it's probably going to be an ABC rather than one, two, three, four, five. It's one, two, three, four, five. We're looking at going back to levels that nobody wants to see. And I'm not saying this is the case. What I'm saying is that most likely this is an A and this is a B and we're going to get a C. Okay. The other school of thought, let's say, is that we finished down here. That was the wave A with a truncated 5, which I don't see the reason why you call this a truncation since you have a fresh low. They call this the end of the, a B and a C, which is in my eyes and with my years of experience, I see this as the wrong way to have a structure that looks orthodox. It doesn't look like a good structure. That's why it doesn't have as high probabilities as the one that I am referring to. But these chances might change. Okay, so we'll have to, as I said, we'll have to receive the new data and see how markets are reacting. Now, I am of the W here, an X and Y school of thought. Why? Because I'm looking at a expanded flat. If you remember, expanded flat is a pattern that has 3, 3, and 5 waves, right? And the wave C is expanded, which is 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. Many analysts would see this as an ending diagonal. I don't, because I don't like how diagonal it's looking, because it doesn't look much diagonal. And the wave one is very extended. It can be extended, but it's very extended in this case. So I'm the W, X, and Y school of thought. And purely if we just pull our Fibonacci down here as well, guys, you will see that we just barely actually touched our Fibonacci over here. You can use the Fib levels on log or not. So if we use it, the normal ones, we see that 51.348, that's a level for the 61.8. I'm pretty sure a lot of people watching here are familiar with the 61.8 Fibonacci retracement. So the question I have to most analysts is, how can you call something bullish if in the longer term we haven't even broken above the 61.8, which is a very critical level? If we continue higher, obviously probabilities are going to change, but for the time being, this is very important. Now, what else we see? Yeah, and 2 more minutes, and I'll be done. What else we can see is that we've broken outside this channel. Currently, it might just be considered as a false break, but for the moment, we'll consider this as a bearish signal. Now, a lot of people, a lot of analysts are going to assume this is an ABC correction, okay, which is a flat, again, with an extended wave C. I don't see it like this. I see it as W, X, and Y, which is a double correction, a double zigzag. Why? I will explain, because I have never seen, and know that there is an extended wave C on a regular flat that extends 261.8 of the Fibonacci extension of the W and the X. Pretty much that's what I mean. Okay, we are nearly looking at the 238 or so. I've never seen, and if anyone has, I would like to know, because that way I can change my count. But if there is no history to back it up, I'm more of the W, X, and Y school here. Now, what I'll be paying attention, because over here, to me, this is an A, B, and a C, okay? And that looks like an ending diagonal to me. I'll be paying very close attention to this low over here, the 44K. If we break that level, there is very good chances that we're going to continue lower. And the next level to look, obviously, will be the swing low at 37.5, sorry. Now, the one scenario is this. The other is that we still have one leg up to complete the diagonal, because if we look at the diagonal here and the interaction between waves 1 and 4, it's not really what we would expect, because wave 4 has to be a bit deeper. Okay, so these are the two scenarios over here. But as I said before, there is also the alternative that we ended down here, and it is possible, but not as quiet. If that's the case, okay, then this is a wave one, and this is a wave two, and this is our wave three. So we've got one, two in here, yeah, and probably we've got another one and two over here for a flat pattern, and then we'll continue three, four, and five, four, three, then four and five. So we're looking at the multi-structural move to the upside that currently is in a corrective mode, okay, and once the correction finishes, is going to resume to the upside. But as I said, for now at least, this is the one that I have on the backlog rather than at the front log, if this is something you can say. So yeah, I hope that people have a different perspective now, because we're looking at the market using Elliott waves. It's a theory which I use in practice, of course, that is more than 80 years old now, and it's amazing to see, and you'll be surprised if you learn Elliott waves, how you can create an edge when you trade. And because you either have a scenario that is likely to be coming in, right, that you trade, or if you get your invalidation, which is, for example, the levels we talked about, to the upside, you get your invalidation, there's the second scenario that you were thinking as an alternative is most likely going to happen. So either way, you can use this subjectivity, as many people call on Elliott waves. You can use it to your advantage as long as you know how to count properly.
Wow. So there you go. A very, very large amount of information condensed into a very
Yeah.
short period of time. Um, uh, so you mentioned you have a YouTube channel. I imagine that you have more education on that channel, right?
Um, I would say that most of the videos I don't just go out and just post my count. I actually do live analysis. So the education, the context is a bit educational, if that makes sense.
Yep.
So yeah, I do weekly video now, to be honest, because of other engagements I have. But there is a lot of, I mean, if you go and watch all the videos I've done since February, uh, there is definitely a good amount of information you can get, even learn about Elliott waves. It's not something that is structured. I do classes and stuff, but this is something different. It's on a private sort of route.
Okay. Well, we've got a bunch of students of Elliott wave theory here in chat, so
Okay,
I think folks really enjoyed that.
great.
Are there any final thoughts before we get going that you would like to share with folks about Bitcoin or about Elliott wave theory in general?
Well, the truth is that Elliott waves in general has been in quite a demand over the past few years. But now with the cryptocurrency boom, because Elliott waves, they are they are the theory was written based of mass psychology, right? So
Mm,
it was written on market that it was very similar to the one we have now in cryptos because of the thin liquidity. Obviously, we didn't have that amount of money back then, but still, thin liquidity and how markets move. You also got to consider the algos as well, and stop handing as well. It's a lot of things to consider, but the truth is that they are on high demand right now, and I would recommend to everyone just at least to know the basics, because if you are only able to identify the fives and the threes, you're going to save yourself a lot of time and probably a lot of money as well, because crashes that happen in cryptocurrency markets, 70, 80%, 90%, they are they are sweeping out accounts in a minute, especially now with margin being
yep.
20x and 100x. I mean, 100 now, it's not anymore, but
Wow.
I would recommend everybody to definitely have a look at it, have a look into it, spend a few hours, and they will be able to see the benefit themselves. Now, when we look at BTC, I would just say that wait for a few more days. End of August is coming in. We are very near to end the month. We have option expirations. We have expirations of other derivative contracts as well. The gap from the CME that we've had at 49K has been closed. So I would want to tell everyone to just be a bit cautious over the next few days, because this is your money, guys. So
Mhm.
treat it carefully.
Good stuff. Stavros, thank you so much for
Thanks,
joining us
Neil.
today. We hope to have you again soon.
I'm more than happy to join to jump again. Thanks, Aaron.
No
We'll speak again
problem.
soon. Yeah. Yeah.
Thank you, Stavros.
Take
Yeah.
care, guys. Bye.
Bye now.
All right, guys, check out Stavros's YouTube channel for more of that Elliott Wave goodness. Producer AB, if you wouldn't mind dropping that just airdrop that right in the chat once again, that'd be great. Stavros, were you waving at us? Do you want to come back on for a second?
I think he was just waving goodbye.
Oh, what's up? Was that goodbye or was that
No, it was
that
just
the universal
was just
gesture?
looking at the comments. Yeah.
Guys, do you have any questions for Stavros while we still have him here?
Happy
We just
to.
pulled him back in.
Oh, if people ask a bit, because I see some questions regarding analysis of other coins. I have a lot of analysis on other coins on the YouTube channel. They're free to watch. So yeah, the playlist is called Elliott Waves on Cryptos. It's purely just for cryptos, nothing else. That's my hobby, you know?
Yeah. Guys,
Yeah.
guy's passionate about it and he knows his stuff. So go check it out, guys. All right. Yeah. Now, someone said Poppy. All right. All right. Stop. Right.
Nice.
All right. Thanks so much for
Okay.
being here, man.
Time to
Have a good
go.
one.
Time
See
to
you
go.
later, guys.
All right. Bruiser AB and me hitting buttons at the same time.